On Business Incorporated today, world food prices extend decline as Ukraine grain shipments resume. Global bonds tumble into their first bear market in a generation. And Zambia's currency surges to pre-pandemic high after IMF deal. Hello and welcome to the program. I'm Will Ibong. We begin as always with market numbers from Africa, where sentiments were mostly positive at intraday. Nigeria's NGX was up 0.10%. South Africa's GSE was up 0.86%, while Egypt's EGX closed trading for the week on Thursday down more than 0.5%. Kenya also closed Thursday's trading session in negative territory. In the Middle East, where most major equities were closed on Thursday, the Abu Dhabi index was up at intraday 0.43%, while the Dubai index fell 0.53% at intraday. Still within the region, Saudi Arabia's and the Qatari exchanges closed in negative territory on Thursday. Now to Europe. In Germany, where there's travel misery today for thousands of travelers after Lufthansa cancelled hundreds of flights because of a strike. Rob Watts joins me to talk about the impact of this and more. Hi, Rob. How big is this impact in the Lufthansa pilot strike having on travel around Germany?
Well, it's set to have a big impact heading into the weekend. When we spoke about the strike yesterday, we didn't know any numbers, but Lufthansa has now said that more than 800 flights, that's basically its entire schedule, in and out of Frankfurt and Munich airports, are cancelled today. Those are Germany's two biggest airports and major international transit hubs. So a lot of people fly into them and then they fly on to other destinations around Europe. So the cancellation of those flights is going to affect a lot of people. Lufthansa says around 130,000 passengers have been affected. They've all been urged to either switch to alternative means of transport or rebook to fly on another day. The strike by pilots is part of a dispute over pay. Their unions pushing for a 5.5% increase in their wages this year, plus annual increases after that to help their members deal with high inflation. Lufthansa did make a pay offer, but the union rejected it. The airline is now urging the union to return to the negotiating table, but that's not going to happen in time to stop those 130,000 passengers having their weekend plans disrupted by this latest strike.
Rob, that's not good news for travelers this weekend, especially, and with all that's happening with energy prices. But Germans are still contending with new rules aimed at reducing the country's energy usage. What sort of restrictions are now in place?
Yes, things are going to be a little chillier than usual here as we head into the colder months. The new rules mainly cover public buildings. Among them, corridors and foyers will no longer be heated, and other rooms in public buildings will be heated only to 19 degrees Celsius. That's a degree lower than the normal recommended minimum temperature. Along with that, despite a couple of years of being told to rigorously wash our hands, public buildings will no longer be providing hot water in sinks in bathrooms, and there's also a ban on the lighting of advertising hoardings at night. And for the lucky few here who have their own private swimming pools, they're no longer allowed to heat them with gas or electricity. So what are these restrictions all about? Well, it's all an effort to conserve Germany's energy supplies as the winter approaches, something that has become necessary as Germany drastically reduces its imports of Russian gas and prepares for the possibility that Russia will cut them off altogether. Chancellor Olaf Scholz says that it wouldn't be responsible to deliberately stop all imports of Russian gas. However, he also insists that without Russian gas, Germany is now probably well prepared enough to make it through the winter.
We'll see what Germany says about this maintenance that they're going on about. But it's the end of the trading week. How are European markets looking?
Well, it's been a week dominated by inflation figures and the growing assumption that the European Central Bank is going to hike interest rates for the Eurozone next week. And European stocks kicked off September on Thursday on a rather dour note. The Pan-European Stock 600 index hit a 7-week low on those rates hike fears. All sectors traded lower during the day. In fact, tech stocks took a particular hit because the sector does tend to be more exposed to interest rates rises. Unrelated to that, Lufthansa's shares fell more than 3.2% after the announcement of today's strike and the massive impact on the airline's schedule. As for trading today, well, we'll see it if European shares head any lower than they have during the course of the week. There are positive signs on the futures market, with the DAX futures here in Germany climbing 1.3%.
No surprise there that Lufthansa's shares would tumble after that strike. Thank you, Rob, for always giving your perspective on the program and sharing your thoughts with us. Now move over to UK, where economic woes still take center stage, and Juliana joins me from London to talk about these developments. Hi, Juliana.
I will.
Juliana, the British Chamber of Commerce says the UK will enter into a recession before the end of this year. This is no surprise, right?
It's not a surprise, Will, and I think this is something that's been hammered home not only by the Bank of England and Chancellor Nadhim Zahawi, but also by big business lobby groups such as the British Chamber of Commerce, who made this statement yesterday. The only differing factor between the statement made by the BCC and the BOE is that the Bank of England don't expect there to be any growth in the UK next year, whereas the British Chamber of Commerce expect there to be a 0.2% growth. So a shining light is there somewhere in the near future. I think all of the data that we've been discussing, particularly this week, is double downing on that sentiment. We had factory output figures from the PMI showing that for the first time in a long time, it's gone below that benchmark being 50. Anything below that shows a contraction. And manufacturing just isn't doing well at the moment. Lots of people are cancelling orders, or they're rescheduling, or they're not investing in this country at all. And this is obviously impacting businesses. They're raising their prices, not just because of inflation, but also because of supply chain issues. And this is affecting consumer confidence. People are not buying because bills are getting higher, wages are stagnating, and this all leads to a contraction of the economy. I think this is going to be particularly worrying for retailers as we enter into the Christmas period, the festive period. We know that they've been hit by lockdowns last year. Even though we had come out of the lockdown, Omicron raised its ugly head. There were last-minute lockdowns not only in the UK but across Europe the year before. Of course, we were in the pandemic. So we're going through this really awful cycle at the moment. But going back to the initial question, no, we're not surprised. I believe the economy already contracted in the month of June. The recession is going to hit before the end of the year. And I think now the odds-on bet is to how long it's going to last.
Juliana, families are definitely finding it difficult these days, especially retirees in the UK, and such a sad time. But still, on the cost of living, Juliana, we're hearing now that about 1.1 million people are going to get £326 government payment today. What are the government's targeting? Who's going to get this?
Well, the 1.1 million people are going to be the most vulnerable in society. So these are people who are recipients of welfare or benefits, as it's called here, / tax credits. This is part of the £650 cost of living payment that was announced before Rishi Sunak resigned as Chancellor, and it is to help with the cost of living. So it's going to be paid in two instalments. The first payment, which people should be receiving from today until next week, Wednesday, the 7th of September, and then they're going to be getting a second payment sometime in the winter of £324. This is a cash payment. It should have been, well, it will be arriving into people's accounts. Some charities say it's just not enough. And then you've got the middle classes who are, waving their finger saying, hey, what about me? I also need help to pay with my bills, and my outgoings are so much higher. Today, well, Tuesday is officially the last day of Prime Minister Boris Johnson in tenure. He has been saying this week, as he's been giving his farewell tour, that there's definitely going to be something on the table for families once his successor is announced. We expect it to be Liz Truss, who's currently the Foreign Secretary, and people want it now. People don't want it in an emergency budget. They don't want to wait more than 48 hours once she's sworn in by the Queen. They desperately need that help. But in the first instance, at least some people will be getting the support that they need over the next couple of days.
Would we consider that a parting gift from Boris Johnson? Is also other markets looking cheaper today?
They are, actually, and I think this is because the pound has been doing so poorly, and of course because the British pound is domestic and the FTSE is more internationally focused. A low pound is quite good for international companies. It's been a short week here in the UK as well. So it doesn't feel like it's been a short week, but it has been. Of course, it was Bank Holiday Monday, but the FTSE all-share is going into the weekend up by 0.75%. FTSE 100 is up by 0.77%, and the FTSE 250 up by 0.72%. In the currencies market, the British pound is slightly up against the US dollar, up by 0.23%. One British pound will get you $1.15. That's still a record low. It's down against the euro by 0.37%, but the British pound is up against the Japanese yen at intraday by 0.32%. Well.
Thanks so much, Juliana. Thanks for giving us some bit of good news of our, terrible news these days. Thank you so much, Juliana, for coming on the program. It's good to have you. And thank God it's Friday.
Thanks, Will. Thank you.
So we move over to Asia, where Asian Pacific shares were mixed on Friday as investors look ahead to the U.S. jobs report for August, a key indicator before the Federal Reserve's next interest rates decision later this month. South Korea's consumer price index rose slower than expected, 5.7% in August from the same period a year ago, less than the 6.1% analysts forecasted. The Nikkei 225 in Japan was almost flat at 27,650 points, while the Topix index was down 0.27%. Hong Kong's Hang Seng index slipped 0.74% in the final hour of trade, and the Hang Seng Tech index dropped 1.28%. In Australia, the S&P ASX 200 closed 0.25% down at 6,828.7 points. The Kospi in South Korea lost 0.26% to 2,409.41 points, while mainland China's Shanghai Composite rose slightly to 3,186 points. Now, U.S. stock futures were flat in early trade on Friday as investors awaited key jobs report from August due later today that will give more information about the state of the economy. Dow Jones Industrial Average futures rose slightly 0.04%. S&P 500 inched up 0.01%, while the Nasdaq 100 futures slipped 0.12%. Shares of retailer Lululemon jumped nearly 10% in late trading after reporting quarterly results that beat Wall Street's expectations. Meanwhile, let's have a quick take on yesterday's trading activity with our correspondent, Maria Bird.
The U.S. stock market was a mixed bag on Thursday, as the S&P 500 was up by 0.30%, the Dow Jones was up by 0.46%, and the heavy tech Nasdaq was down by 0.26%. This mixed day caused a very volatile environment in the U.S. stock market, but it did break a 4-day streak of losses for the S&P 500. It is also clear that investors are a bit concerned about the volatility of the market, despite the growing growth in the U.S. dollar. The U.S. dollar rallying to be one of its strongest it's been in several years could have major impacts on the U.S. stock market. Investors are very curious to see what will be released on the jobs report on Friday, despite the fact that we are seeing a decrease in insurance claims for unemployed and a decrease in the number of unemployed in the U.S. The stock market continues to be under watch during its volatile moments in the beginning of the month of September.
Thank you, Maria. Global bonds have slumped into their first bear market in a generation under pressure from central bankers who are determined to quash inflation, even at the cost of a recession. Global aggregate total return index of government and investment-grade corporate bonds have fallen more than 20 from its 2021 peak, the biggest drawdown since its inception in 1990. Officials from the US to Europe have hammered home the importance of tighter monetary policy in recent days, building on the hawkish message from Federal Reserve Chair Jerome Powell at the Jackson Hole Symposium. Rapid interest rate hikes deployed by policymakers in response to soaring inflation have brought to an end a 4-decade bull market in bonds. This has created a difficult environment for investors, with bonds and stocks sinking at the same time. Next, conversations around more stories on Africa coming up in a moment. Do stay with us. This is Business Incorporated. Welcome back. Global food prices fell for a 5th month after demand for some products weakened and there was a seasonal uptick in supply. Wheat harvests in the northern hemisphere are helping ease supply constraints while more grain trickles out for ports in Ukraine. Data from the United Nations Index of World Food Costs dropped 1.9% in August from the previous month. The index remained at the lowest level since January. Falling prices may offer some relief to consumers as they grapple with a deepening cost of living crisis. Meanwhile, food inflation shows no signs of easing in many nations. With a higher energy prices likely to boost processing costs, harvests may shrink in the long term as farmers curb fertilizer use. Zambia's kwacha is now the world's best performer against the dollar on Thursday after the nation won long-awaited approval for a $1.3 billion bailout from the International Monetary Fund, that's the IMF. The copper-producing nation's currency had gained 3.1% against the dollar and is at its strongest level since March the 10th, 2020, a day before the World Health Organization declared the COVID-19 outbreak a pandemic, and that sent the nation's currency tumbling. In 2020, Zambia became the first African nation to default on its foreign debt during the pandemic and has been seeking to restructure external liabilities that reached $17.3 billion last year. Now, over 2,000 delegates from more than 100 countries, with at least 48 from Africa, have been discussing the theme, One People, One Destiny, Uniting and Reimagining a Future at the inaugural African-Caribbean Trade and Investment Forum in Bridgetown, Barbados. And our Channels TV correspondent, Chris Illems, has been following the event, and he joins me to bring us up to speed as to what has been happening. Hi, Chris. How are you doing over there?
Doing very well, Will. Thank you so very much. It's morning here.
Oh,
so good morning.
You're looking chipper, so it's good morning over there in Barbados. So how's the weather in Barbados?
Beautiful, beautiful. The weather is beautiful, and of course, the conference is entering day 2, and people are already coming in. So any moment from now, the program will start.
Okay, so what as the program is this, the day 3, what have been the activities so far, and what has been the impact that you've had?
You see, for a lot of people who actually came to this program, they came with one mindset, not just to talk, but to actually carry out that process of building a bridge between the Caribbean and Africa in terms of trade and investment. And that is exactly what is happening. As it is today, transactions are being signed, talks on how to build a bridge, not a bridge literally, but then to build a connection between the Caribbean and, of course, Africa. We have similar challenges. We have similar weather conditions. We have similar culture. We have similar environments, investment environments. So why can't we make the most of it? There was a statistics, of Africa actually, as of last year, imported as much as $4.5 billion of fish, from the outside world, and just 1% came from the Caribbean. And yet, these are people. So what this conference is trying to do is to make sure there is that environment where Africans and of course the Caribbean can actually work together. They can invest together, and that's why Afrexim Bank is planning on investing as much as $700 million on building infrastructure that would help build that connection between the Caribbean and of course Africa. For today, it's going to continue. There will be more signing of documents. There will be more transactions that will be made as well.
That's good news, Chris, to know. Could you tell us maybe the nature of this infrastructure that the Afrexim Bank plans to build to, foster this relationship that we're talking about?
Okay, first of all, for you to get to the Caribbean from Africa, you probably need to get to Europe first, or you get to the North America, and then you come down to this part. And yet, the flight directly from Lagos to Barbados is about 8 hours. But if you decide to go that route, you might spend like 24 hours, you might spend even more. So how do we now begin to build connection? Air connection, sea connection. These are some of the issues that we're tabled. And of course, going forward, Afrexim Bank is hoping that infrastructure that would support trade, that would support relationship, that would support transfer of knowledge, capacity building. These are some of the issues that would be addressed by the over $700 million that Afrexim Bank is planning to invest here in the Caribbean. Not just Barbados alone, but the Caribbean, all the countries. So they'll be working with the Caribbean communities comprising of all the countries along this line to ensure that infrastructure, the necessary infrastructure, are built, to really foster trade and, of course, investment.
Fantastic news, Chris. Really fantastic. So the conference, the forum ends today. Apart from the Afrexim commitment, what are the other key takeaways that we should be looking at?
Well, by the conference ends today, the Caribbean nations are already they're set for Africa, and they hope Africa is also set for them. So, travel restrictions have been removed. When we got in here, we didn't need a visa from Lagos to come in here. So things that would help movement so easy, they are being looked into. So that one is very important. And hopefully the Caribbean nations should be getting a lot more of trade from Africa. And even coming here, I saw some Nigerian banks, I saw some Nigerian oil companies here also soliciting for trade opportunities. So a lot will be happening, in the coming days. Because the most important thing is they don't just need talk; they want actionable plans. And these, as of yesterday, Afrexim Bank signed a relationship agreement, a trade agreement with all the Caribbean countries. So that is what is happening right here, and the future looks very beautiful. The future looks very beautiful for this, and I hope that Nigeria will be part of it, because right now I actually didn't see any Nigerian delegation, any federal government delegation. Though we saw some Nigerians here, I saw Ben Bruce also here, but he came on his own capacity. As for the FG delegation, we didn't see any. I saw from Ghana, I saw from Senegal, I saw from South Africa, but from Nigeria, no delegation.
We don't know what what message that's sending, especially with the AFCFTA that we're looking forward to. We hope that this builds positive sentiments, amongst African nations and the Caribbeans as well. Thank you, Chris Ilams, Channel Service correspondent right there in Bridgetown, Barbados, for sharing this update with us. Thank you so much.
Thank you so very much, Will.
And that's it on Business Incorporated. Thank you for watching. I'm Willie Bung. See you next time.